What do Canadians need to know about investing in VCs, and how can Pycap help?
Okay, so one of the probably the first and foremost main thing that investors need to understand if they're considering investing into a venture capital fund or a venture capital related opportunity is that this is an extremely risky investment. In fact, it's considered to be one of the most risky type of investments that you can make. But as we know, those of us who studied finance and are in the investment world, what you want to do is if you take a large amount of risk, firstly, you want to mitigate that as much as possible, but you also want to get access to a return potential to compensate you for that high level of risk. And so if you can afford to make an investment into something risky like a venture capital fund, make sure that you're investing with individuals who have a positive track record of making these types of investments in the past, a good mix of expertise among the team, serial entrepreneurs, investors, and people who really understand the industry or the investment thesis of which they're going to be investing into. And in terms of how Pycap addresses all of those elements is we have an amazing team. We have an investment committee of serial entrepreneurs and successful investors with exits that range from the tens of millions to the hundreds of millions, and an individual actually had an exit of over $1 billion. And we all work very closely together. And in the world of venture capital, as discussed, the main role, so our main job is to access deal flow, number one, that isn't necessarily readily apparent or available to the general public. So it's finding those deals. And then, of course, we take it a step further and perform like a very rigorous deep dive in terms of due diligence. So we get to know the company, the entrepreneur inside and out, but then we get to know the industry and the trends and everything else we would need to know in order to make an intelligent decision on if we want to actually enter into a deal. The next phase of the process is to negotiate that deal. What is the right valuation to be investing in? How much equity should we be receiving given the amount of capital the company needs to commercialize their product or take their business to the next level? And then the step after that, when an investment has been made and we've struck a fair deal in terms of the valuation of the business and other terms and conditions outlined in our legal documents, then our job becomes working with the entrepreneurs to grow the company in the most efficient way possible, so our limited partners can get the highest return, and then seek and facilitate an exit opportunity for each company within our portfolio as well. So that could be in the form of a strategic acquisition, vertical or horizontal, as well as an initial public offering or some other form of exit, like a reverse takeover or an investment acquisition by another fund.